Hello, everyone. Welcome to the return of a Bitcoin Brief with your host, Tone Vase and Jimmy Song. Jimmy, it's been a while, man.
Yeah, dude, you got to stop traveling or something, right? Like you're like, tweeting photos from everywhere, doing shows on Price, but as far as the actual stuff going on in Bitcoin, your viewers haven't really seen that much.
I know. And also, like, I promote this YouTube channel. It's like, yeah, you can go on this YouTube channel and, like, understand Bitcoin and learn about it. And I'm like, crap, the daily shows haven't been happening, right? You're not going to learn much
Mhm.
about Bitcoin watching the price shows. The price shows, however, don't require any preparation, which is why it's easy for me to do them even from airports. But now that I had a little bit of time to kind of put some articles together, here we go. Too bad Giacomo couldn't join us, man.
That's right. Well, I mean, at some point.
I know. We tried getting Giacomo on. All right. What's new with you, man? Before we get to the stories, what's going on? Give us any updates.
Yeah, so my book, Programming Bitcoin, has been translated to Korean. So I'll be in Korea, like starting tomorrow, actually. I'm flying there tomorrow. And I'll be presenting at TechFin.Asia, which is a conference there, and I'll be speaking. And I'm also having a book launch event for the Korean version of the book, along with a bunch of devs and stuff. It's on my Twitter if you're interested, and you can still register for that event and so on. It's free.
All right, very cool. Yeah, I haven't been to Korea since like 2015. I need to go back there. I haven't been in Asia.
Dude, you need to stop traveling. You need to you need to relax a little bit, like settle down a little bit. I know you want a family, Tone, so
I
you
got
need to
I
like
got
start dating on a normal basis.
I like the normal basis part. I have one more year of travel. My
Uh-huh.
2020 is almost fully booked out outside
Uh,
outside the U.S. And but after that, I think I'm gonna take a year off from travel, and we'll see what we
uh,
can do with that year, and then take it from there. All right,
all right.
let's go to the stories. Let's see where we are. So we will. Oh, you know what? One second. Let's just quick advertisement for Unconfiscatable, where Jimmy Song is going to be in February as well. It's going to be a great panel, man. The developer panel, Adam Back, yourself, Peter Todd, probably Johnny Dilly, but we might have like two tech panels. Jack Mollers has also agreed to come. Now we have a lightning guy on there. So we'll have to figure it out. This is going to be great.
Yeah, I think the only disappointment's going to be that it's so short. It's only like really a day of actual speakers, but we'll make it work. So it'll be fun.
I know. Maybe next year.
Mhm.
Maybe 2021. We'll go for 2 days of conference because we're kind of focusing on the workshops. But yes.
Mhm.
All right. Let's go in with the stories. I mean, the big news broke. Well, crypto is definitely getting mentioned. Probably not in a great way. So a developer got arrested. Here's the article from forgot the name, unfortunately. Virgil Griffith got arrested for going to North Korea. I think this conference took place when? Back in March or something like that. Uh,
April, I think. Yeah.
yeah, in April. Went out to North Korea. They were having a cryptocurrency, I guess, conference. I actually didn't really know about it. It would have been interesting to get some details on what the hell that was all about. I do. There were other people that went, but they weren't Americans. So, but he is an American who's mostly been living in Singapore. Like, went out there and recently, just the other day, got arrested for it. And this is not good. Like, what are your general thoughts about it? I'll let you answer first, and then I'll throw in my thoughts. All these links are in the video description, guys. I mean, this is a very complicated issue that we probably should be careful of what we say to this article.
Yeah, I've made my feelings known on Twitter, but just to reiterate, I think what he did was both really, really stupid and really, really despicable. But I don't think he should be imprisoned for it. And let me go through some of the details of what he did. First of all, he's been kind of curious about North Korea, and you can see it in his Twitter timeline. People have been sort of dissecting it ever since this story came out. But this is a guy that works for the Ethereum Foundation, has been promoting Ethereum to pretty much everybody all over the world and so on. And one of the things that he did on his Twitter timeline is post a picture of the visa that he got to go to North Korea. Now, the thing that's significant about that is that months before that, he actually asked the U.S. State Department, hey, I want to go to North Korea. Can you give me an exemption? Because currently, apparently, you can't go as a U.S. citizen because of the travel ban, and you need specific permission from the U.S. State Department to go there. They said no, and he went and got the visa anyway. And one of the things that the North Korean government agreed to give him was a visa that was on a separate sheet and not in his passport, so that the U.S. couldn't tell. But of course, he posts that actual visa on his Twitter account. You're going to have to scroll down for a while to get to it. But that's what he did. Now, not doing that and then like coming back and then going through an airport where he can get arrested, just idiotic at so many levels. But yeah, I mean, like you're going to go and poke the US bear and then go travel to the United States, right? Like it's so stupid. Like you do anything in North Korea, you're going to get on the State Department watch list. And, you know, we know that North Korea has like a group of hackers that are trying to go and make money for the regime so they can you know, continue to oppress their people and stuff like that. And this is where I think what he did is really irresponsible, not just irresponsible, but despicable, because we know that the North Korean government is trying to hack crypto exchanges. They're doing ransomware attacks and things like that. They need a way to launder their money. And his talk at this conference was about avoiding sanctions, right? Essentially laundering money so that he can do various, so that the North Korean government can do various things. Now, there's a lot of claim that, you know, what he presented was all sort of like, you know, information that's already out there, you know, on the internet and so on. So he didn't present anything new. But regardless, why would you want to help a regime that is like brutally like, you know, oppressing its people? They have like concentration camps still for people whose like, you know, grandfather did something bad, right? Like it's like that is just unconscionable. That said, the sanctions part of it, I disagree with, because it's really the dollar hegemony that's enforcing that those sanctions. And, you know, I mean, to a degree, it's not hurting the regime as much as it is hurting the North Korean people. But I mean, he's just like incredibly naive, incredibly like just, you know, like talk about hubris on this guy. And, you know, he's part of the Ethereum Foundation. It's just, it boggles the mind that someone like that's supposed to represent the Ethereum Foundation did something this stupid and this despicable. There's a DPRK passport, or the visa that he got.
Yeah, and he literally posted it back in August. I'm surprised it took this long for the US to get him.
Well, I mean, you have to be physically present for them to go and get you, right? Unless you do some sort of extradition from wherever he's from. But I think it was just sort of like a way for them to just get him while he was in the States. And he is a U.S. citizen. So, I mean, man, I can't imagine this going to end well for him. And there's a lot of people that are trying to defend him and saying, oh, you know what? He's being arrested for teaching and spreading the good news about Ethereum. He went to North Korea against the wishes of the State Department. And you know, like you pissed off someone really, really powerful. And I don't care what you thought you were doing. Maybe he thought he was going to teach some North Korean peasants how to get around and like topple the regime or something. But I mean, travel to North Korea is extremely restricted. and you only get you have a political handler with you at all times, you're only going to see what they approve you of seeing. You're only going to talk to people that they approve you of talking to. You're not helping any of the poor people there. You're only really helping the regime oppress its people. So, I mean, like, I don't know what kind of conception he had of North Korea before going, but what he did was just despicable in every way. And like the fact that like he thought he could get away with it just points out his stupidity.
Yeah, no, I'm pretty much in full agreement with you. There's not that much I have to add, but look, the people that are defending him, I mean, sure, you may have an argument in defending the fact that he's teaching math, but it doesn't matter what he was there for, because he broke the law by going there.
Mm-hmm. Well,
And
I mean, not just that, but he like apparently it was like party officials. I mean, we don't know how many of those people are working in the cyber department for North Korea, trying to like hack at servers and stuff. And I mean, like there's some speculation that they hacked a lot of like the South Korean exchanges and stuff like that, and they might have some ERC-20 token that he could assist them in laundering. We don't know how much of that he did or didn't do, but I mean, like, even if you're helping without intending to, by going there and talking to these people, it's just kind of a stupid thing to be doing. And, you know, I mean, there's a lot in the indictment about how he, you know, he had in mind that, you know, avoiding sanctions was going to be the topic of his talk. And that's why the State Department told him not to go. And, you know, I mean, you're like poking the bear in like so many ways. I mean, like, to a degree, I don't have that much sympathy for the U.S. Department of Justice either. Like, I mean, they're enforcing the law that the United States made, which they can do because the dollar is like the reserve currency of the world. But I mean, like, to a degree, this is like you know, slam dunk for them, right? It makes them look good, and they get to arrest somebody that did something bad with North Korea. It deters future stuff. They can ask for more funding. It's just like, dude, what are you doing? You are just strengthening, you know, like everybody except for the people that you represent, basically.
Yeah, and you also mentioned like you're not sure what he thought he was doing. If you, let's say, he was going there to teach like the peasants to potentially that could have ended a lot worse for him had he was actually doing that, right? Like in multiple ways, like that could have ended so much worse for him.
I'm sure he would have gotten arrested and you know, been
in North Korea,
Korean gulag at this
the rest
point.
of his life there.
Yeah.
All right. Let's move on from this story over to. Nope, that's the same one. Let's stick with the blockchain, and then we'll move over to the other stuff. So we haven't done the show in a while, and we constantly have to remind people what is and isn't a blockchain and what is or isn't a blockchain use case. And once again, like clockwork, we end up on a story with IBM, which continues to still not understand what a blockchain is. So all you have to do is read the first paragraph, and you can stop there. The computing giant won a patent on November 12th for preventing anonymous theft by drones. With the Internet of Things altimeter that triggers upon liftoff, tracking the package's altitude and uploading the data to a blockchain platform. This is where you have to stop reading the article, because you have to understand what a blockchain can and can't do. And I love the fact how even CoinDesk, who should know better, can at least do a little bit of investigation and explain to us what blockchain platform IBM is actually using.
Oh, gosh. The only way this works is if every single drone has this chip or whatever altitude sensor that altimeter, you know, in it, and it's required by law to have it or something like that. And at that point, you might as well just have, you know, GPS coordinates and everything else. But this is a ridiculous thing on its face. I mean, maybe you can't steal somebody else's drone to steal a package or something like that. But if your drone is being stolen, then you got other bigger problems. And the whole idea that blockchain helps this in some way, shape, or form is a ridiculous thing on its face. If it's centralized, if everything has to have some sort of like, altimeter or GPS tracking thing, on every drone had that, then there'd be a central government database that knows where every drone is, and it can figure out whether or not, you did something illegal with it. I mean, that may be the world we're headed towards. But regardless, blockchain has nothing to do with this, and it's ridiculous that they're pushing this as a narrative.
All right, well, we'll go ahead and leave it there. But once again, IBM does not disappoint. All right, well, let's move on over to this article caused a lot of waves and a lot of discussion recently. It wasn't this article. It was the tweets prior to this, but this article came out. Factual inaccuracies of breaking Wimble's privacy model. Let's remove the fact that Wimble is actually relevant. Let's assume Wimble is relevant, because we all know that the moment it was known that Wimble cannot be applied into Bitcoin due to the fact that you can't add it as a soft fork, it has to be added as a hard fork. The only possible solution to that problem, the only possible solution for Wimble to have any kind of relevance is to create a shitcoin with Wimble code. And now time is being wasted in debating whether Wimble was hacked, or whether Wimble is breakable or not breakable. I don't know where you want to go with this. I don't know if you want to talk about how the Grin and Bean are totally irrelevant shitcoins, or do you want to talk about the technology of Wimble that unfortunately could only be monetized through a shitcoin?
Well, we don't know if it can be done via soft fork or not. I think Litecoin is basically going down that route. They have a proposal to try to incorporate Wimble. I have no idea whether that'll get in or how much review it's gonna get, given that Litecoin has like very little activity like in the last 6 months that aren't patches that are basically taken from Bitcoin. The rest of this is really about Wimble and the privacy sort of perceptions that it has. A lot of people think that Wimble is a privacy coin on the, sort of like Zcash, Monero, or I think Decred has something now, and Dash might have something, whatever. All of these privacy coins need something called an anonymity set. That is, you need to make sure that you are shielded with other people's transactions, so that they can't necessarily link it to you. They might know that you're part of the set, but they have no idea which one you are. And that's the whole idea behind how Monero works, how Zcash works, how any of these privacy coins work. Is the more anonymity that you have, the better it is. And this is exactly how Joy Market works too, because whoever is in the input set, that's your anonymity set. The thing from the article that was pointed out is, well, if you're a supernode and you're observing and logging all that stuff, you can pretty much tell where the inputs and outputs are going. And if you know where the output is going, then you know something about the person sending it. Now, the thing about the article that was very clear was that the amounts are hidden. And that's a good thing, because that's one way to link stuff. But the rest of it is pretty accurate in the sense that if you are a supernode, and if they are using dandelion routing and so on, even with that, you can oftentimes just be able to tell, as long as you're logging all of that data, which payments are going to which. And that's the whole thing behind the privacy of it, is that it's not that private, at least the network as it exists right now. Now, as it grows, theoretically that gets a lot better, but we don't know. And that's the big thing about this article, is that they're sort of like going over the trivialities, but really a lot of this privacy stuff is not something that we necessarily know that much about, because we need to know how the network topology ends up in a scenario where it becomes more popular. And frankly, it might not ever get that popular. I mean, it's been in the works for a few years now. It's been released for about a year almost. A lot of people have done stuff with it, but it hasn't got very much traction. The price isn't very high. Not a lot of people are using it. I mean, there is some whale that's like, contributing 50 BTC mined from like 2010, like for its development or something like that. But that's about it. We don't, I don't, I just don't see this as that big of a deal. And, unfortunately, it seems that the public doesn't think that it's that big a deal either.
So let's get back to, is there a possibility of Wimble in Bitcoin as a soft fork? This is the first time I'm hearing about it.
Well, I mean, Litecoin has a proposal that's done as a soft fork, and they're going to use extension blocks in order to do it. It's kind of stretching the definition of soft fork. I think certainly if you ask somebody like Luke, like he would say that's not really a soft fork. It's
yeah, but I mean, weren't extension blocks like shown to be kind of dangerous?
It absolutely can be, because it requires more CPU bandwidth and storage for the people doing it, and like the math involved and stuff like that isn't actually that complicated. So you can do it. The question is, would you want to? Because I personally would be very against it. Like there's a computer science theorem about this. You can have perfect blinding or perfect binding. Blinding means that you can have privacy, like that's perfect, and like nobody can know about what's which input was which output and stuff. Perfect binding means that you respect the 21 million Bitcoin limit. You can have one guarantee or the other. For me, the 21 million limit is way more important than some amount of privacy. I mean, privacy would be nice, but binding is way more important. And this is the trade-off that Bitcoin made, is that you want perfect binding. And, all these other coins like Zcash, Monero, whatever, if you have perfect blinding, then, like you find some elliptic curve exploit, you're going to be able to use it to inflate that currency. So, I mean, in a sense, the much better thing to be doing is the perfect binding, and that's why I wouldn't support Wimble, like as a soft fork. I mean, I think Litecoin is going to try it. I honestly wonder how long it'll take them. I'm guessing like a couple years, but yeah, I mean, it is possible.
Yeah, well, it'll take. Well, here's the thing, right? Because when you said, "I wonder how long it will take them," and my initial reply was going to be, "Well, they can do it tomorrow." The problem is they don't have like the not enough people to get it done tomorrow. But because Litecoin is so centralized, it'll take no effort at all to actually get it approved and passed and in the code. The thing is, I don't think they have enough competent people to actually, get it done.
Well, I mean, you need this isn't like simple, and from a security standpoint, the auditing is like just insanely high, right? Like think about like the tiny changes that go into Bitcoin Core. If it touches consensus at all, you want like 10, 20, 30 people. Right now, we're in the middle of the Taproot review, which is SegWit v1 basically, and there are at least 100 developers that are studying it very closely in order to see if it breaks anything. And there's a lot of people that are looking at it extremely closely, like scrutinizing absolutely everything. And this is at least an order of magnitude more complicated than what Taproot is. And that's what they're trying to do on Litecoin. I mean, good luck. Like, I mean, you can implement it, and I'm sure somebody can write the code in maybe a month or so. But like, you release that into the wild without some good review, well, I mean, there goes your coin. You might have an inflation bug that somebody exploits and so on.
My point was twofold, right? So one is having the developers to get it done, and two, like you said, if it comes anywhere near the consensus mechanism, I mean, you got a big problem, especially in Bitcoin. But in Litecoin, like they'll pass whatever. I mean, they'll put anything into the code to try and pump the price of Litecoin, right? That's number one priority. Like the priorities are very, very different between Bitcoin, the Bitcoin code changes, and any other, I guess any other coin. Like everything other than Bitcoin is a shit coin, right?
Yeah. I mean, it's basically they're trying to do something different because we know that like Litecoin actually isn't like there's almost no innovation on it, right? Like other than script, which they
there's no
copied
use
from
case.
Telegram.
There's no use.
Yeah.
There's
So they're trying to like the halving already happened on Litecoin and it like the price tanked and everything else, and there's just not that much interest. This was a way to drum up more interest. We'll have to see exactly how I think that spike was right around that their halving, and then since then it's just gone down and down and down.
So Litecoin, which one is Litecoin? This is Litecoin.
The blue one, yeah, you could see the spike earlier this year. I think that was right around like mid-June, I think was when their halving was. Right. So I mean that's right. It's basically gone all the way down since.
Yeah, there was a pre-halving, hype back in April, and then the halving in June, and they are now. So Litecoin is now down 22% for the year versus Bitcoin, not versus the dollar. 22%, they're down 22% versus Bitcoin on the year, and they already had their halving, and this is why I talked about the death spiral of all proof of work coins other than Bitcoin, because the moment Litecoin goes 4 years without doubling in price, it's dead.
Yeah, I mean, we'll have to see, but. I mean, we don't have that many data points for some stuff like this because it's measured on a scale of 4 years. It's kind of like most of these coins haven't lasted that long. So yeah.
Right. Well, Litecoin has. Litecoin's been around for close to 8 years now. I think this is their second halving, right?
Yeah, this was their second halving. Yep.
All right. So they've been around for over 8 years, and I think the next one kills them. I think the next halving kills it unless they go to proof of stake or come up with other, insane inflation ideas. Though you did mention, the two parts of Bitcoin being either the anonymity set or, the making sure that you have 21 million Bitcoin. And obviously having 21 million Bitcoin is more important. I would like to add that for me personally, and you and I can disagree, Jimmy, for me personally, the unconfiscatability property is above the 21 million Bitcoin. So even if Satoshi had invented Bitcoin with infinite inflation, I would still find that to be very, very useful for the unconfiscatability and the censorship resistant properties. Now, the debate would have been if someone immediately released a clone of Bitcoin or a fork of Bitcoin, making the supply finite at 21 million Bitcoin or 100 million Bitcoin or any finite amount of Bitcoin versus Satoshi's original. Let's say Satoshi did put in infinite inflation. Let's say he was a Keynesian that solved the double spending problem, in which case you have, let's say, Bitcoin at 2% forever inflation to reward the miners. He could have also done like the Monero did, 50 Bitcoin per block forever, which is disinflation.
No, Monero doesn't do that. Their emission schedule decreases every block. So, but it's like a tiny amount. The infinite inflation one that you're thinking is Ethereum. They have a fixed amount of Ethereum that comes online every year.
Okay, so I thought that Monero did that as well, but I guess not. But Satoshi could have done that. He could have picked, an arbitrary number of 50 or 100 Bitcoin, and he could have kept that going forever. So, like in 50 years, what's another 100 Bitcoin compared to the amount of Bitcoin that would be in circulation? So, had he done that, it would have been very interesting to see if, a fork of Bitcoin making the supply finite would have overtaken Bitcoin and for people to switch. And I think that, whoever did that fork, it would have been a centralized version like a Litecoin. And I think it would have been challenging. So, I guess especially you, Jimmy, should be thanking Satoshi for making it 21 million Bitcoin, because if he did put in infinite inflation, I think it would have been still Bitcoin with infinite inflation. And it's something that we would have to deal with, because I don't think people would have switched. It would be an interesting kind of hindsight, kind of alternate reality that we would be dealing with right now. It would have been very, very.
All right. So let me just say it this way. There's no way I would have gotten in if there was infinite inflation. And there's a lot of people that also wouldn't have gotten in. I don't think it ever reaches any
Come on, Jimmy. You don't think the solving the double spend problem and the mining system, you don't think that would have gotten you interested as a computer scientist? Come on.
I mean, it might be interesting, but I wouldn't have gotten in. I mean, like the thing is like the 21 million limit is what brought a lot of people in, right? Like when I first read about the 21 million limit, my immediate next thought was, well, I better be one of the first people to get some of this in case it becomes popular. As soon as there's scarcity, there's motivation to go get it. If it's infinite, then it's like, oh, who cares? Like that. How's this different? It's not really digitally scarce. If it's not scarce, then it's kind of useless.
Well, wait a minute.
It's not really new.
Wait. I'm going to challenge you on this one. It's not useless, right? Like even if it wasn't scarce, like the US dollar is not scarce, right? We agree.
No, I mean there's at least a fixed amount of it. MP3s are not scarce, and you might download it, but at that point, no one really values it.
Well, Jimmy, if Bitcoin had infinite inflation, it would also have a fixed amount of it. It would just be increasing, just like the US dollar is increasing, right?
Yeah, all right, fair enough. But I just wouldn't have been as interested and I don't think a lot of the people that got it.
Would you not agree if Bitcoin was created with 2% inflation? I'm not saying that's a good thing, right? Let's not do that. I'm just playing devil's advocate here, right? If Satoshi had created Bitcoin with 2% inflation, let's say once the block reward is down to 1 Bitcoin, it would start inflating at, let's say, 2% per year, whatever, or per 10 years, whatever, or per halving, whatever. If Bitcoin was infinitely inflationary, would it still not be better money than every other fiat currency because it still has the unconfiscatability property? It is still politically neutral. It is still governed by math. It may not be the math that you like, but it's still governed by math. It is still censorship-resistant value transfer. It still has better money quality than all other fiat money. It's just not finite like gold. It would have been better.
Yeah, I mean, I think a lot of people would have preferred gold to something like that because it gets less than that.
The unconfiscatability property doesn't have censorship-resistant value transfer.
Yeah, I mean, I don't think it would have gotten nearly as popular. That's all.
I agree.
And if the value isn't there at a certain it wouldn't have gotten the momentum. Maybe it takes like 30 years to get to where we are right now in that sort of world, but. I mean, again, it's all speculation. I just think this the sort of absolute scarcity that Bitcoin has is very, very valuable.
No, Jimmy, I completely agree. Like it would not have gotten the same traction. It would not have gotten up. It would not have increased in value as much because some people were interested in it specifically because of the finite supply. It gave them more of a speculative side to, hey, I got to have some more Bitcoin now. So I completely agree with you, but it still would have been the best money we have today, even if it was done with infinite inflation. It just wouldn't be as good as Bitcoin is now. Now, I do want to address a comment in the chat from Adrian who says, Tone, someone would have forked Bitcoin with a fixed supply, and that would have gained more traction than the forever inflating one. And this is the big debate, right? Because Jimmy, you've mentioned this on prior shows. And my answer to you, Adrian, is I don't think so. Because what makes Bitcoin unique is the fact that its early years were decentralized without a leader. So when you say someone would have forked Bitcoin, that someone would be the leader of Bitcoin, whether it's a Vitalik or a Charlie Lee or soon to be David Chaum or Zuko, whoever it is, right? And that is the challenge. So be very, very grateful that Satoshi created it with finite supply, because if he didn't, there would still not be a better Bitcoin, even with a finite supply, because it would never get that decentralized side to it.
Yeah, that's the thing. Like Satoshi disappeared in 2010. I'm not sure there would have been enough momentum in the developer community to make it actually decentralized. In my view, it was centralized until Satoshi left, and Satoshi decided on a lot of stuff up until then. And I think there was one hard fork in there for that reason, because Satoshi just decided
You
it.
know what? Hey, Jimmy, I gotta correct you. I have stated that as well, and I was corrected on the spot by other core developers saying that was also a soft fork.
No, there was at least according to Alex Morkos. This is when I talked to him. It could have been done as a soft fork. Those I think it was deleting a bunch of opcodes or whatever, and it could have been done as a soft fork, but instead it was somehow done as a hard fork. I'll have to look up the actual thing.
Oh, this isn't that creation of the 1 billion Bitcoin.
That was just everyone going back and creating a longer chain, which is not a hard fork at all. And that's pretty much exactly what a soft fork is. It's the market deciding which one they like better. But I mean, with regard to all of that, I mean, yeah, we could speculate on what Satoshi would have done, but if he disappeared at the same time, which is late 2010, I don't think you would have gotten that many developers that were interested, because the timeline's slower, and then maybe you never have a decentralized coin, in which case it's not really worthwhile, right? Like it's the same as fiat. So I'd be grateful that Bitcoin is decentralized. I suspect that the 21 million limit is a large part of why it's decentralized, but we don't know, and that's really kind of like we're playing Monday morning quarterback a little bit. So maybe we should move on to the next story.
Yep. I was just about to say that as well. So we're gonna finish up the same concept. This was published in Forbes. Bitcoin's ultimate price floor could soon be destroyed. And the article, to me, is lacking a bunch of details, but it's basically talking about how the electricity use is very, very bad, and yada yada yada. And they're talking about here earlier this month, co-founder. Okay, yes.
Yeah, I just chatted you the actual paper that this is all based on, so you can bring that up.
Okay, so they're proposing using some kind of different chips and remove the dependency on Bitcoin mining for electricity. So maybe you can throw in some more details, but my initial reply is always the same. It's like this. That's why I had this graphic made saying, yes, you can come up with a lot of interesting stuff in computer science, but if you can't add it into Bitcoin with a soft fork, the only option left is for it to become a shitcoin. But in this particular case, Jimmy, you and I have both made the argument how important, the investment in that electricity is to Bitcoin security. So go ahead, floor is yours.
Okay, all right. So this is based on something called optical proof of work, which is in the paper. Tone, if you want to pull up the actual paper. It's there, but basically it's done by these researchers, and it uses a different chip using photons of light instead of electricity. It's got some history, and it's an interesting concept, and from a computer science perspective, there's definitely interesting stuff there. Economically, though, essentially what this is doing is when you're mining, you have two things. You have CapEx and OpEx. CapEx stands for capital expenditures. This is the mining equipment that you actually have to go and get. OpEx is the actual electricity you need to run it. Right now, CapEx is still significant, but OpEx is becoming more and more important in Bitcoin. Because you need to get cheap electricity in order to make these miners work. And you could go buy like an Antminer S9 right now for like $300. But it's not going to be very profitable given the current difficulty, because it's unless you get like free electricity or something like that. So what they're proposing, what Optical PoW does, is it takes a lot of the OpEx and puts it into CapEx. Essentially, what they're saying is, instead of putting all this money into electricity, we should put more money into these interesting chips and so on, so you can sort of advance the scientific breakthroughs that might occur there or something like that. And it's sort of like a tenuous argument, in my opinion, from an economics perspective. Yeah, research doing that will inevitably cause more people to figure out ways to take advantage of this for other stuff. But it's a tenuous argument. And eventually, as more optical chips come online, it becomes it goes from CapEx to OpEx anyway, because you still need electricity to run these chips. And the more of it that you can do in any sort of proof of work, the better it will be for you. And because of the difficulty adjustment algorithm that's built into Bitcoin, the more of them there are, it's not just CapEx. You still need OpEx or improvements to the chip or something. And that's what they're hoping for, I think, with this paper, or the researchers, is can we get more optical computing chips as a result of motivating it through a currency, or through ideally Bitcoin for them, but it's not going to happen. It's just putting in more into CapEx. It's already capital heavy already. And the OpEx is just a small part of is a part of it, but economically, it doesn't make any sense at all. They've been talking about this for at least a year now. I first heard about it, I think, around December of last year. So it just seems kind of like dumb to me, like from an economics perspective. From a computer science perspective, there are interesting things, but you're going to have to compete in the market with everybody else instead of expecting Bitcoin to subsidize your research, essentially.
All right. Very well said. Significantly better than I could have said it. All right. So finally, that's pretty much it for all of our stories. But Jimmy, you wrote another article recently called on altcoin valuation. It's also in the video description. Go ahead and tell us about it.
Yeah, so I did some research, and I thought it would be good to tell the community about like the history of altcoins, because a lot of people, I think, don't really understand what makes Bitcoin different, or what happened and stuff like that. And I go through sort of the history of all of these altcoins, and which ones make them valuable versus which ones don't. So I start with Litecoin, which is probably the oldest altcoin that people know about. Maybe they've heard of Namecoin, which is maybe like 6 months older and stuff like that. But if you look at the history of Litecoin, and it's based off of something called Tenebricks, which was released like 8 days after Namecoin, and essentially it had script as the proof of work. I think it reduced the block times down to 5 minutes. But the big thing that it had was a big pre-mine for the creator. So Charlie was kind of outraged at that, and he created something called Fairbricks, which was a clone of Tenebricks, except it didn't have the pre-mine. If that reminds you of Zcash and Zclassic, that's because that's exactly the same thing, except with like Zcash. Zclassic took out the pre-mine on Zcash. Of course, Fairbricks didn't go anywhere. And a few months later, Charlie decided to relaunch Fairbricks under a different brand name, basically, and it was called Litecoin. And the big thing about Litecoin was that it had a lot of good marketing around it. And specifically, Charlie gave it a really good slogan: silver to Bitcoin's gold. And that's what made it successful. That, and the lack of a pre-mine, which at that point in Bitcoin's history pretty much meant a death knell for an altcoin. If you had a pre-mine, nobody was interested. But that was the big thing. And from that, I extract that generally altcoins are launched after a big pump, because Litecoin and all of these first generation altcoins happened after the first pump in July of 2011. And then, a bunch came later in 2013, that including Mastercoin, Ethereum, Counterparty. They all came like in the mid to late 2013 range. And then, Ripple, and then ICOs and hard fork coins and stuff like that. But the key similarity between the ones that succeed versus ones that don't, the argument that's always given is that they have a better technology or whatever. And my argument in this article is that no, it's not. Technology has nothing to do with it. Fairbricks and Litecoin were essentially the same. One succeeded, one didn't. Why? Litecoin was better marketed. Counterparty and Ethereum had essentially the same feature set, and Counterparty was actually launched earlier. What made them different? What made the difference between one that's second in coin market cap and one that's like in the hundreds or something like that? It's Ethereum actually marketed way better than Counterparty did. Similar thing with Bitcoin Cash versus something like Bitcoin Private. Bitcoin Private's actually got a lot more of the stuff that Roger purports to want, which is privacy, shielded transactions, cleaner, cleaner blockchain and stuff like that. But he promotes BCH, and that's why BCH has more value. Altcoin valuation is almost entirely dependent on marketing dollars. You can copy the code for free. Most of these are open source. You can clone a coin for almost nothing, and you can launch it. But you're not going to be able to clone all of those marketing dollars that went into the coin already. And that's why altcoins have the valuation that they do. And that's essentially what I talk about in the article.
Yeah, Jimmy. So it's actually funny. I didn't want to interrupt you, but it's actually funny how people back in 2011 realized how dumb, printing money for yourself as a pre-mine was, and why those coins failed and like Fairbricks and Litecoin succeeded. But in 2014 and 15, it was the other way around.
And if you scroll down a little bit, if you scroll down just a little more, and there's a tweet by Vitalik that's there, a little more. There it is. Yeah, I personally am really proud to have helped set the precedent of small pre-mines being legitimate. Small being 67%, of course. But this is the brilliance of Ethereum, is that they marketed their pre-mine as a way to fund development. And that was sort of like the twist that they put on it to make it acceptable. And I think that was completely despicable. And this is why I oppose Ethereum to this day. But that's how they came to what they came to. And sadly, that narrative has kind of stuck, and like people aren't as outraged when, like Ripple, for example, like pre-mined everything, right? They don't have any mining revenue or anything.
Right.
But that's considered acceptable these days in 2017, whereas in 2012, like they languished for a long time in a sub-penny range because of that.
And even back then, even back in those days, like I remember Counterparty, and I thought it was the most ridiculous thing in the world, because I know they tried to create a fair way to create the Counterparty tokens. What was the ticker? XCP. So I know they wanted a fair way to create them, but the way to create them was to burn and destroy Bitcoin. And like from day one, I'm like, that is the dumbest thing anyone should ever do, is destroy Bitcoin for a shitcoin. And
well, I'm thankful that my Bitcoins are worth more as a result of them burning the scarcity.
Right.
So
I remember arguing this point with Joncef and Krista Rose, who were the two people after whom the word Bitcoin maximalist is named. And they were both like into Counterparty, like burning their Bitcoin, which is great for us.
Yeah, I think the whole Counterparty project, the thing is, like, they actually kind of had pure motives in a way. They were trying to clone Mastercoin and do it in a way that wasn't so blatantly unfair or like technologically completely incompetent like Mastercoin was. And, again, they had feature parity with Ethereum in 2014, but nobody was paying attention because they didn't have any marketing. Ethereum, on the other hand, raised 30,000 Bitcoin, and they used that to do all of their marketing, and they obviously did a lot better. The thing is, like, altcoins are not about technology, guys. It's way more about the marketing, and that's how it's been.
Yeah, you could have put any kind of shitcoin here, right? Like this really should be like my Venn diagram of my 4-part Venn diagram of shitcoins. Yeah.
Well, I get in that section, I get into why altcoin marketing is just so effective. And it's largely because once you hold an altcoin, then you start telling everybody else about it. So like there's like a multiple that you get out of marketing on an altcoin because there's a network effect because all of the people that hold it are incentivized to get other people in on the scam. In much the same way that multi-level marketing schemes work.
Right. So speaking of which, just the comment on the latest shitcoin that is about to come out. I don't know if you've seen this tweet from me, Jimmy, but this is Richard Hart's Hex scam, which he started marketing back in early April, but is launching tomorrow. Have you heard this?
I have, and I'm kind of mad at you that you did that because I don't want to give this asshole any more attention because I think that's exactly what he is. He's a scammer.
I know, but did you see this 30-second clip?
I think I did. He admitted that he's a Ponzi or something.
Right. I'm gonna just play it for the video.
Only way you're going to get more adoption is if someone has the margin to advertise into the public to onboard new users like the Ponzi schemes are doing. The Ponzi schemes have referral programs. The Ponzi schemes print you interest, and we're doing the same thing. Now, he thinks we'll be high inflation. During the first year, we are because we reward people so much.
All right.
Here's the important point.
So that's it for that. So there's the latest in line of shitcoins. Hey, quick look at the mempool. I have no idea what happened on November 29th, but doesn't seem that bad, right?
I think November 29th, if I'm not mistaken, was Black Friday. So that probably had something to do with it. Like people, I don't know, I guess wanting to get in on the deal. So they sold some money, but other than that, I mean, like it's clearing every night. I think about like a few weeks ago, there was a huge spike of 0 or 1 Satoshi transactions that all got cleared overnight. And this what you should be doing during this time is, if these should get higher later, you should consolidate your UTXO so you don't have to pay so much. But then again, you lose some anonymity, so maybe you want to keep that. It's entirely up to you. But this is the sort of thing that you need to think about going, with the current mempool and fees and so on.
All right, and that's it for the news section. Go ahead, Jimmy. Tell us a little more about your book, and you're off to Korea tomorrow.
Yeah, so Programming Bitcoin is available in English and Korean. There's a Japanese translation coming. I think the Indian subcontinent has their own English version that's cheaper somehow or something like that. So it's available on Amazon. In Korea, you're going to have to go and search like Han Books or something like that. The other book is the Little Bitcoin book, which is available on Amazon. We have a translation into Spanish. Portuguese and I think Hindi are going to come out in the next month or so. And we're working on Mandarin, German, French, Dutch, and I think Arabic, Turkish. Yeah, there's a bunch. Yeah, there's the book. It's also out in audiobook tone. So for people that don't like to actually flip through a book, would rather be exercising or something, while they do it or multitask or whatever, that's the way to get it. I think it's actually cheaper right now getting an audio book than the actual physically printed book. So you should take advantage of it while you can. I'll be in Korea next week for techfin.asia. I will be in Montevideo for La BitConf, which is happening the week after. And then I'll be taking a little bit of a break until Advancing Bitcoin and then Unconfiscatable, which is happening in February.
All right, very cool. Yep, and the only workshop you have coming up is the one in Las Vegas for Unconfiscatable.
Yes, that's correct. I'm working on a new class programming wallet. I'm about 2/3 of the way to finishing making that course, but it will build on programming blockchain and teach you how to basically make your own wallet and all of the things that go into doing that.
All right. Speaking of Unconfiscatable, Jimmy is one of the speakers, along with Adam Back, Peter Todd, Trace Mayer, and many others. Max Kaiser, of course. Seyfuddin is too busy with his new courses and all the stuff that he's doing, so I couldn't get him this year. We'll shoot again for next time, but it's still going to be a great event. Really, really looking forward to it. The poker tournament will sell out, guys. Only 55 seats left. Jimmy, I got a spot reserved for you. You're gonna play again, right?
I don't know, man. I don't know. Like that was a lot of grind just to get my money back, basically. And the only reason I got that was because I knocked out Doug Polk. But yeah, I'll think about it.
It's not at night anymore. It's gonna be the conference is Saturday. The poker game is Sunday at 1, 2 o'clock or something.
Yeah, but man. All right. I'll think about it. Generally, I like to be home to play with the kids and stuff. But yeah, we'll see.
All right, we'll try to keep convincing Jimmy. Of course, you'll be there for the carnivory dinner Friday night, right?
That I'm definitely there.
All right, we got you. All right, guys, that's it. Jimmy, you're welcome to stick around. I'm gonna take a quick look at the price, or we're gonna let you say goodbye. Your call.
All right, I think I'm going to say goodbye. This song is done.
Later, Jimmy. Thanks for joining. Oh, I almost stopped the live stream right there, guys. That would have been that would have been scammy of me. All right, let's take a look at the price of Bitcoin. Here is the weekly chart. I'm not going to spend too much time on this. Price analysis. Today is Sunday. The traditional markets are not open yet, so all we can talk about is Bitcoin. The current weekly candle no longer looks so hot. Now, we still have about 5 hours to go, and I honestly think there is a high probability that we can close this week below a critical 50-period moving average and below a critical Fibonacci line. If that happens, this becomes a pretty weak candle. So the way to evaluate the current candle, whether it is a strong candle or a weak candle, all you have to do is compare the body of the candle, just the body of the candle, to the shadow above the candle, okay? So this is a weekly candle. So we can go ahead and very quickly do a ratio. So we can take a look at, we should start from the middle, right there. Now, what is the percentage of the body of the candle? That is, I should probably zoom in more. I want to get this as accurate as possible. Now, you could actually put the values in, but I think that's pretty good, right? Let me do, okay, I can see it here. Okay, I want to get this as accurate as possible. Though you guys know me, I don't care about a difference of a penny. There. I don't think I can zoom in anymore. There we go, okay? So that is 6.31%. Now, if I take this and I flip it to the other side, you can see that it is already bigger, 6.87%. So here's how to evaluate it. Very, very simple. If the shadow is longer than the body, that is a weak candle. If the shadow is going to be smaller than the body, then that's potentially a stronger candle. I'm not going to say strong, but stronger. I wouldn't necessarily call it weaker. That's for sure. So that's the big challenge. Where are we going to close the week? Over the next 5 hours. And if we close the week below this cluster of resistance support, works in both ways right now. If we close this candle below 72.50, I will treat this weekly candle as a weak candle. If we close above this area, I will treat it more as a neutral candle. According to sequential, we are not only bearish, but we're supposed to be in a short trade on sequential. The sequential on the daily is telling you not to have a trade at all. You're supposed to wait for a red 2 to go below the red 1, but the daily sequential did tell you to go long, but right now, being a red 1, this is where you take your stop loss and get out of that long trade. which would have been challenging to take on, considering your higher level time frame is telling you to be in a short trade. So the daily time frame telling you to be in a long trade, while the weekly time frame is telling you to be in a short trade, is seriously problematic. It's one thing when the bigger level time frame is bearish in nature without actually activating the short trade. You can then attempt to do a counter trade on a lower level time frame. In this case, that is certainly problematic. But if next candle, if we start trading below 72.50 tonight or next candle, that would certainly activate a short trade on a daily scale according to sequential. Now, you don't have to trade sequential, but I'm going to go ahead and put it here. Now, this is done with the assumption that we will not go below this line on current candle. So probably a bad assumption because we could go below that line on current candle. So I'm going to move it one candle over. The daily, this is a very, very bad looking posture. This is showing you that the price is incredibly weak. It did not even have the strength to make it back to a moving average, to make it back to a breakdown level of 8,000 to 8,200 zone. This is basically a somewhat scary situation that could potentially lead to significantly lower prices than 6,500. This is a monster reversal candle. We did not have one of these over the last 2 days. Would have been easier to assume that we're going to go down to new lows. Right now, the 12-hour chart is being supported by a moving average, but it did flip over right before the 9 came. And as you can see on my 12-hour chart, I am not very optimistic. I only become optimistic once we go above 10,000 or 9,600, the vicinity of 9,500 and above. That's the only time I become optimistic. Until that happens, I will be a pessimist. I will stay a bear. At the moment, I'm almost a bear short term. I'm kind of neutral short term, but I'm a bear intermediate term. And of course, I'm always a bull long term, and the halving is coming. So the long term is becoming closer to reality. The 4-hour chart was looking really, really good. Bottoms and rallied hard on this 4-hour 9 earlier this morning. Should have done a video around that time. And we are creeping up a little bit, but I don't like this consolidation at the low. If Bitcoin doesn't start trading above 7,500 soon, and by soon, I mean, in the next 3 candles or so on the 4-hour chart. So if by this time tomorrow, or even earlier than that, if by early Eastern time tomorrow in the US, we're not trading above 7,500, I think Bitcoin is in serious trouble. Anything below this red line gets it into a lot of trouble. So I do have this giant red arrow taking us to the bottom of the 4-hour channel, down in the $5,000 range or slightly lower than that. So be careful, guys. This is not, for me, a bullish looking situation. All right, everything else is closed. I'm not going to really bother. This show has gone on long enough. Thank you, Jimmy Song, for joining me to talk about the news. Hey, guys, if you like these videos and want to support, I do have upcoming workshops. One of them being the options trading webinar. This is general introduction to options. Oh, we have a details page now. This is on my to-do list for tonight. I will create a much better description for the options webinar because I've already done one of these. So I know exactly what's going to happen on each day. So I will write this up and update. Other than that, the other workshops are my advanced trading workshop in Las Vegas, Giacomo Zucco and Socrates, both happening in Las Vegas at Unconfiscatable. So go ahead and check that out. If you want to support my work, please check out the affiliates page. It doesn't cost you anything to use any of these products or services if you're going to use them anyway. This is how you can support your favorite content creators to keep providing you free content. I'm going to update my Amazon shopping list. I just did a bunch of shopping on Amazon myself. I don't make anything from this. Amazon dumped me as an associate. So this is just the tech gear that I'm currently using. So you can go ahead and check that out. All right, guys. Whew, winded. All right. That's it for me. Don't forget Unconfiscatable, the poker tournament, the pinball tournament, and the rest. And I will see you all on the next one. Stay away from scams. The latest one, Richard Kart's Hex. Good luck, guys. Talk to you all later.